this is going to be a little bit different of a video, but one of the most important videos that I've ever made. If you care at all about your altcoin bags, then this video is going to give you perspective on the next move for your altcoins. All of the good, the bad, and the ugly is captured in this video. I'll simply and easily show you how the interest rates, Bitcoin, the US dollar, and the economy is about to affect your altcoins. You're going to want to watch the entire video and pay close attention. So without further ado, let's get into the most important video that I have ever made. Everything that's happening right now is happening right before altcoin season, potentially just a few months away, which I will get into. For you to understand some key details about this video, I'll quickly go over the business cycle. The business cycle is every 3 to 5 years in length. We had a financial crisis in 2008, which the Fed decided to save big banks and big institutions. The business cycle got reset in 2009, just a year after the financial crisis, and Bitcoin started trading in 2009. And this is simply why Bitcoin has had a 4-year market cycle up until this point, because each business cycle has roughly lasted around 4 years. So I brought out the business cycle diagram and I'm going to explain it to you very briefly and quickly and how this thing works. Okay, so as you can see here on the bottom right hand axis, you have time. On the left hand axis, you have GDP, which is gross domestic product. This pretty much details out the health of any economy. And at the top, obviously, you have the 4 economic phases of the cycle. So you first have the expansion phase where the economy is growing. So phase 1 is the expansion phase. And you can see here, this is when the economy begins to grow. You have a line though that goes right through the middle, and this is your neutral point. It's kind of like your breakout point for the outperformers. This is what you get into your tech stocks, your finances, stuff like crypto starts to outperform. Then you hit a peak, okay? And your peak is usually when euphoria is at its highest. So for Bitcoin cycles, this is in 2021, 2017, and 2013. So slowly after that phase, and this is usually around the time where inflation is running hot and interest rates start to go back up, you start to see the contraction phase where you have prices of assets coming down. And right around this period here in the contraction phase is usually where you want to be buying Bitcoin. So this is at the depths of the bear market. So this is in 2022, this is in 2018, and 2014, 2015 to be exact. And now in phase 4, you have the recovery phase, which is right around here. And this is kind of like where it leads into the expansion phase, which is right over here. Now, quickly, I want to get into an article that came out recently on September 4th, and this is about the SEC. So SEC goes all in on pro-crypto agenda with slew of digital asset rulemakings. Now, I have a few parts highlighted here that I want to read out for you guys. The SEC released its largest rulemaking agenda Thursday, which focused heavily on easing regulation of crypto sector and following through on promises to integrate digital assets with the traditional American economy. Of 20 rulemakings proposed by the agency today, nearly half have to do with loosening crypto regulations, which is obviously a good thing. We've had harsh and strict crypto regulations up until this point over the past, since Bitcoin's inception, pretty much. So now that we're finally seeing a lot of things fall into place, this is really good for our altcoin bags. SEC Chairman Paul Atkins said today in a statement, "A key priority of my chairmanship is clear rules of the road for the issuance, custody, and trading of crypto assets while continuing to discourage bad actors from violating the law." Now, this is nothing really new. We've always had bad actors being called out, but I think what they mean is that even on a smaller scale where you see a lot of people scamming and doing different things in crypto that are nefarious, they're going to start to crack down heavily on those things, which is obviously a good thing for us, right? This is going to allow more people to feel a lot safer when delving into crypto and not look at it like a secondary or third market. For us to get to the point that we want to be, where we have tens of trillions of dollars within this asset class, we need to have crypto regulation, and this is a good step in the right direction. Now, just to get into the last part of this article, the SEC has been vocal since the beginning about the second Trump administration's aggressive approach toward loosening crypto regulations. But today's update on the agency's active rulemaking agenda marks perhaps its most concrete move yet to turn those promises into official agency policy. So overall, this is a good thing and another step in the right direction. We're seeing bills pass, we're seeing laws pass, we're seeing lawmakers and different chairmans change. You might also see the Fed change soon, and we're going to have a lot more pro politicians and pro regulators in this space that are favoring crypto. So this is only a good thing for our altcoin bags. And I want to break down a few more things that are going to affect our altcoin bags that are very, very, very important. This is the most important video I have ever made. And these are some of the reasons why coming up. First reason why is the interest rates. Now, I'm on the CME Group website, and they have a Fed watch tool, which shows you pretty much when the next interest rate hike decision is coming, and that's in 11 days and 20 days, kind of like just under 12 days. Now, if we delve a bit deeper, we can see the probabilities of where we think rate cuts will go in the coming months. Now, as you can see here, we have a potential 25 basis point cut coming in September, and this is up at 92%. This is very, very different from what we saw around a month ago. It was kind of around the 50% mark. Now we're actually seeing 8% that we get a entire 0.50% cut versus having a 0.25% cut, which means we're most likely going to get a interest rate cut coming in September, which is obviously a plus. Now, if we go into October, we can actually see another potential interest rate cut in October down to 3.75, which would be another 2.5 basis point rate cut, which is pretty interesting because just a few months ago, we had no potential rate cuts, but because the job market came in so flat, which is why Jerome Powell is rethinking his position and his stance on interest rates. Now, something we have to take into consideration is that we do not see the full effects of an interest rate cut until 6 to 12 months out. So that would put us right around the timeline of February to between April for that blow off top and that real expansion phase. But obviously we'll have to wait and see. And lastly, come December this year, we're also seeing a 67% chance that we get another rate cut on top of the 2 previous months, which was in September and October, which is pretty exciting. This is a good thing for our bags. This is what we want to see. We want to see more inflation, funny enough, but everyone tends to say inflation is a scary thing. Inflation is a bad thing, but inflation is what makes your assets go higher. The reason why we put money in assets is because if you hold them in dollars, your dollar deflates because you're putting more into circulation. If you're going out to the store and you want to buy gas or food or spend money on a car or something for your house, those things tend to go up in price as well, right? But those are things that we consume. We want to hold assets because these are things that go up in value that we can then sell in the future at a higher price, thus making us more money in the short to long term. This is why we hold assets. This is another reason why you should also try to produce something. When businesses produce goods and services, they can raise their prices as inflation tends to go up, and they can also make more money. This is why it makes sense to own businesses. This is why it also makes sense to not hold your savings in dollars. You hold them in Bitcoin or other assets such as real estate and so on and so forth. And just to show you what Polymarket is saying about interest rate cuts, this is a site where people put their money where their mouth is and bet on things that are happening in the future with different industries. For crypto specifically, well, Fed rate cuts more specifically, I should say, we have an 89% chance for Fed rate cuts, which directly affects how the crypto market will be moving. So 2 key correlations when it comes to interest rate cuts. And I want to show you the actual chart. And this chart dates back to the 2000, but we're not going to use it for that. What I want to do is correlate this chart to the last 2 Bitcoin cycles, okay? Now, as you can see here at around February 20th, and we saw a drastic rate cut. So I'm not talking about from the absolute peak where rates hit their high. I'm talking about from when they took a drastic drop on all interest rates. So from the point where we got that massive rate cut drop down here to the point of the top of the market cycle, it was roughly around 2 years. So just know that this line here correlates to the line that we're about to see when the Fed starts to drop interest rates. This line up here is where we are currently. So if we detail this out on the chart, and obviously it hasn't happened yet, but this is what I'm assuming, and there's other metrics that we're going to get into obviously later in this video that are extremely important that are going to affect our altcoins. But what I'm assuming is that when we get this big drop in rate cuts, from this point, we literally went down from 1.75 all the way to 0. I don't think it's going to be that drastic. I also don't think it's going to be that steep, right? We might get down to around the 3.5 level around here, right? But this is going to allow us to extend the cycle into next year. And this is where the 4-cycle theory starts to break down for a lot of people, because we're going to go into the 5th year of the business cycle, and people aren't ready for that. People believe the market cycle is going to end this year. But how is that even possible when inflation is about to go crazy through the roof when you start to lower interest rates, right? Because it's like a lever. When you lower interest rates, you get more inflation. inflation and vice versa. So how in the world will asset prices go down after interest rates go down? It just doesn't make sense. Asset prices will eventually go up, which is why I think we are probably most likely going to get at least a 2026 spring top. And it's very possible that we get a Q4 2026 top, but as the months go on, I'll obviously update you on that. So that is why you subscribe to the channel, so you can get updates like this so that you can stay up to date on the market. And obviously when new data arises, we take it into account. So last thing on the interest rates, this is a very important point that I forgot to mention. Because it took so long for the Fed to start to lower interest rates drastically, we're probably going to get a slower grind upward because we've seen a slower grind downward on the interest rates. So who's to say that we see a mega blow off top like we did the last two previous cycles? We might see something more tamed, that's more spread out and elongated and a lot less drastic, but still potentially end up hitting prices for Bitcoin that reach into 200 to 300K. We'll have to wait and see, obviously, and wait for more data and wait for the market to react and see how the market reacts. Now, a very, very important metric and one of my favorite tools that I use to detail out where we are in the cycle and if a potential altcoin top is the ISM. And this also relates to the business cycle. This is why I gave you those key points earlier in the video so you can understand what I'm about to tell you. Let's keep this very, very simple. When the ISM crosses the 50 mark, which is the neutral point, right? So if we go back over, you can see this point here. This means that we usually start to see the remnants of an altcoin season, not the peak of an altcoin season, the remnants of an altcoin season. You can see back here in 2021, right? February 2021, when we had that super blow off top in around February to spring-ish, you can see that the ISM was up above 60 and hovered around the 60 point mark, right? You can also go back to 2017 and we go to the end of the year, you can see the ISM got up above 60 and got close to 60 just prior. And if we go onto the Bitcoin chart, you can also see that detailed out on the chart. You can see right here that Bitcoin hit a high in February to around April. That was the first top. If you go back to 2017 all the way down here, let me just make the chart more visible for you as well. You can see that Bitcoin also hit a top in around the end of 2017. So the ISM 2 times has perfectly detailed when an altcoin season is starting, which is very important when you get above the 50 point mark. So around the 55 point mark, which is right here, if I could have drawn a line on this chart, I would have. You can see that the ISM shows you exactly when altcoins start to pump, because from that point of the 50 point level, you have a few months to gain a bag, take some profits, slowly scale out of the market before you hit that eventual peak, or roughly around 8 to 10 months later after we cross the 55 point mark. Now, because it's going to be more long dated, I expect us to see a slower grind upward, and it may take a little bit of time for us to cross that 55 point mark. But you can see here that when we got that first string of blue candles in April 2017, if I go back onto the ISM and I go around to April 2017, let me find it here, boom, right here, you can see the ISM was already over the 55 point mark. So you should have already been kind of cautious and known that this entire move was about to start. More recently in 2021, because this is a cycle that we all know and love, you can see this green candle here in October 2020. If we go to the ISM in October 2020, let's just find it first. You can see here that once again, it crossed the 55 point mark already, and we start to see the altcoin season begin, and we had a top in February 2021, just 5 months later. What I'm trying to explain to you is that once we hit that 55 point mark on the ISM, you're going to want to pay attention heavily to what the price of Bitcoin is doing and what the price of your altcoins are doing, because it's around the time where you start to see those parabolic movements upwards. And just a bit of caution for you, it's not to say that we always touch the 60 point mark, because even if we go back to the 2000s, we hit 57 on the peak, we hit 60, we hit around 57 on the peak again. We hit another peak at around just above 56. We hit a peak around 60. And then in 2021, we hit a peak around 64. So you don't want to exactly aim for that 55-point mark. It's usually a good time to take a little bit of money off the table when you cross the 55-point mark. If I haven't already bored you to tears by me saying the 55-point mark a million times, but I'm going to say it again because I want it to stick in your head. And yes, I'll be here to make videos on it so that you don't have to watch the markets or the ISM for yourself. So subscribe to the channel, leave a like on the video as well. But let's get into the next thing that is vital, very important to your success in the crypto markets. This is going to be a very quick explanation because this isn't hard to understand. First, we have the Bitcoin phase where Bitcoin price starts to surge and money flows into Bitcoin. This has pretty much been happening since 2022 up until roughly maybe a month or two ago when we start to see the money flow into Ethereum. Now, this is the point where you see Bitcoin dominance start to fall and you start to see altcoins dominance start to rise against Bitcoin, obviously. Once you have that parabolic move in ETH and it's sustained, right? This is not over a few weeks, so we haven't had, in my opinion, this true move yet, but sustained over a long period of time, and we see Bitcoin dominance truly break down, then you'll start to see a move into your large caps. And this is your chain links, your SUIs, your morphos, your aerodromes, so on and so forth. And once you start to see this happen is usually when you know you're already kind of in an altcoin season. A true peak, and I like to say a true peak of the altcoin season is more so that last 2 to 3 months where you see market caps of 10,000, 100,000, a million, a couple million start to absolutely fly off the handle and go completely unhinged, right? This is when things go absolutely parabolic. Everyone's making money. Everyone's super greedy. The fear and greed index is literally over 95 every single day, close to 100. And this is when you start to take the bulk of your profits. So pairing this chart up with the other things that I talked about in this video is very, very important, but that isn't it. We still have more to talk about. Now, there's a post that I say from Watcher Guru, and I suggest you follow this guy. This guy has a Telegram handle and a Twitter handle. I don't have a problem shilling it because it's a great source, and this is kind of where I get my news when I'm on the go, when I'm not at home next to my computer. Just in, Bank of America says the US dollar is overvalued, but could become undervalued next year. So this is again playing into the elongated market cycle this time around, because when we look at the DXY next, and that's the next tab I'm going to go over to, and it's going to show me the US dollar over the course of the last 10 years. Now, another thing that correlates with Bitcoin's price, as you'll see here, is that every time we hit around the 90-point level, right, we also get a top in the Bitcoin price. Remember that number? Late 2017, early 2018, we also got a low on the US dollar. You can come here to the last cycle. You can also see here, remember that time frame, March 2021, February 2021, when we talked about it with the ISM and interest rates. You also see here that the US dollar, the DXY, was also flashing at its lows around this time. And if you look up on the chart, remember the 100-point is the neutral mark, and we just barely cracked below that. We haven't even gotten close to the lower 90s yet. So until I see the dollar weaken and break down, right, I'm not going to feel the need to sell any of my bags yet, my altcoin bags yet. And remember what Watcher Guru and the Bank of America, which is one of the largest banks, I might add, said about the US dollar, right? It says the US dollar is still overvalued, right? Meaning up at this price level of around 97, the US dollar is still overvalued, right? It could become undervalued next year. Now, they just don't want to take a hard stance one way or the other because this is a massive publication, right? This is Watcher Guru and the Bank of America, right? So, but the fact that we're banking on interest rates coming in, like we talked about in length, I won't go over it again. We know that the US dollar is going to be more inflated, which means it's going to be devalued, which means the price of the dollar, or the point of the dollar, is going to go downward. And that's the only thing you really need to look out for. So considering everything I've talked about up until this point, the last thing that I want to bring to your attention is where I think Bitcoin's price is going to fall. Now, this is the volume profile. And the easiest way to look at this is that we have different points of control. This red line here is called the POC, the point of control. And this is pretty much a point in the market where we've had a ton of trading back and forth from the bulls and bears. And this is where price struggles either to get below or over. You also have these valleys here, right? These valleys where price moves a little freer. And you can see here on the chart, correlated to these valleys is where we get these massive green candles, right? So in my humble opinion, I think that the price of Bitcoin is going to fall a little bit further down to about the 107 to around the 109 level, somewhere in around this range. We're already pretty much there. It wouldn't be a bad move to buy a little bit of Bitcoin right now. Now, I'm not saying you load up the truck. I do think you still see potential for Bitcoin to fall even lower. Now, if we were to break this point of control here, we could easily fall back down to the mid 90s levels. And that's when things get a little bit spooky, which I'll obviously make an update video for that because there's no support in this valley here. So point is, if you want to pick up some of your altcoin assets, you want to be looking for the price of Bitcoin to fall somewhere between the 95 to 105K range. Now, if we fall below 90K, I think all hell breaks loose. I'm not saying there's a bear market, but I definitely see another drastic drop in Bitcoin's price. But up until this point, we're still holding support, so I wouldn't get too antsy or be too worried about that. But thank you for watching this video. I love you guys, and I'll see you in the next one.